Hi, welcome to UCSI University. Financial Reporting Standards or Financial Accounting 1. Hi, there. In today's world, governments often support some business in order to make certain activities acquire some assets, so in today's video we will take a look at how to account for government grants under MFRS 120.
For the purpose, MFRS 120 is to encourage an entity to embark on a course of action which it would not normally have taken if the assistance was not provided. Government and government agencies often give some form of assistance to entities. The assistance may take the form of grants to acquire assets or to subsidize specific expenses, or it may be non-monetary assistance. MFRS 120 Accounting for Government Grants and Disclosure of Government Assistance deals with accounting for and disclosure of government grants and the disclosure of other forms of government assistance. The appropriate accounting treatment for such transfer of resources shows the extent the entity has benefited from such. Government grants are sometimes called by other names such as subsidies, subventions or premiums. After this, let us go through the term under MFRS 120. Government is defined government agencies and similar bodies, whether local, national or fair value is the price that would be received to sell and assets or paid to transfer a liability in an orderly transaction between market participants at the measurement date. Next, forgivable loans are loans which the lender undertakes to waive repayment of under certain prescribed conditions. With applying the modified retrospective approach, a company is not required to restate comparative information. Opening equity is adjusted. Second, a company is allowed to choose, on a lease-by-lease basis, between two alternative methods of measuring lease assets. A company can either measure lease assets as if MFRS 16 had always been applied or at an amount based on the lease liability. Third, a company is not required to recognize lease assets and lease liabilities for leases with a lease term ending within 12 months of the date of initial application. Next, what is government grants? It is in the form of transfers of resources to an entity in return for past or future compliance with certain conditions relating to the operating activities of the entity. Government grants shall be recognized in profit or loss on a systematic basis over the periods. There are two approaches to accounting for government grants. The first one is capital approach and the second one is income approach. Capital approach is directly credited to shareholders' interest. Then income approach is credited to the statement of comprehensive income over one or more periods. Therefore, under government grants have two type of categories of grants. First is grants related to assets, second is grants related to income. Government grants related to assets, including non-monetary grants at fair value, shall be presented in statement of financial position either by setting up the grant as deferred income or by deducting the grant in arriving at the carrying amount of the asset. The first option is to account for a grant as for deferred income. In the case when a company received the grant, the journal entry is to debit cash or bank account and credit deferred income. And then you need to recognize the grant in profit or loss. You will do it on some systematic basis over the life of the asset acquired. The journal entry is to debit deferred income and credit profit and loss. The second option is to account for a grant as a deduction amount of acquired asset. In this case, when you receive the grant you debit cash account and credit asset account. Here you do not need to take care of amortized deferred income in profit or loss because everything is reflected in depreciation charge. Now, let us look at the grants related to income. It is presented as part of profit or loss, either separately or under a general heading such as other income. Alternatively, they are deducted in reporting the related expense. For the grant related to income, the first method claims that it is inappropriate to net income and expense items and that separation of the grant from the expense facilitates comparison with other expenses not affected by a grant. The second method, it is argued that the expenses might well not have been incurred by the entity if the grant had not been available, and presentation of the expense without offsetting the grant may be misleading. Next, let us discuss revocable and repayable grant. A government grant that has been revoked or becomes repayable should be treated as a revision of an accounting estimate. For the treatment is dependent on how the repayment is made. First, if the repayment of the grant is related to income, the company should be applied first against any unamortized deferred income and any excess should be recognized immediately as an expense. Second, if repayment of the grant is related to an asset, the company should be recorded by increasing the carrying amount of the asset or reducing the deferred income balance by the amount repayable. The cumulative additional depreciation that would have been recognized to date as an expense in the absence of the grant should be recognized immediately as an expense. Okay, now let us look for the government assistance. Government assistance is an action by the government designed to provide an economic benefit specific to an entity or range of entities qualifying under certain criteria. Under government assistance does not include benefits provided only indirectly through action affecting general trading conditions, such as the provision of infrastructure in development areas or the imposition of trading constraints on competition and not quantified and introduced into the financial statement. Disclosure. The following matters shall be disclosed. First, the accounting policy adopted for government grants, including the methods of presentation adopted in the financial statement. Second, the nature and extent of government grants recognized in the financial statement and an indication of other forms of government assistance from which the entity has directly benefited. Thirdly, unfulfilled conditions and other contingencies attaching to government assistance that has been recognized. Thank you.